And we are live. Good morning, good afternoon, good evening, depends on where you are in the world today. My name is Clara Lyons-DeVaughn. I am the broker owner, got this glare going on, broker owner of Lyonsview Realty. We provide residential, commercial for small businesses, and nonprofits and property management services. We also have Lyonsview Academy, which is our real estate pre-licensing and continuing education arm. We do credit counseling, distressed homeowner solutions, and lifestyle, health, wealth, and wellness education. So I'm really, really excited that you're able to join us today. Feel free to like or share this video. Our goal is really here to help you stay current on those trends that impact your bottom line. We want to give you resources, information, tips to assist you in making the best financial decisions. And our commitment is to maximize your wealth building power now and in the future. So glad you tuned in today. Welcome, welcome, welcome. Feel free to like and share this video. And our guests are really here as a resource to you. So feel free to ask questions. Um, if you have any suggestions for comments that you'd like us to do a show on for information, just type that down in the comments section and go from there. So our guests today had a little bit of an emergency, so I'm not sure they're going to be on. I'm not sure they're going to be on. So hello.
There, it's Frank.
I'm live on the air. Can you get in the studio?
I'll try to. I'm in the neighborhood fighting industry meeting, but it hasn't been signed on, so I'll go to the website that you gave me.
Okay,
All right.
thanks. Mhm. Okay, so he may make it. We'll see. But anyway, as I was saying, last time we talked about New Jersey down payment assistance programs, and those were through the NJFMA, which is the New Jersey Mortgage Agency Association. And this week we wanted to give you some tools and tips on the Pennsylvania side of the house. So Pennsylvania also has a housing finance agency. Um, they specifically have a program that is called the Keystone Program. And the Keystone Advantage Assistance is a loan program. Basically, what it is, it's like a second mortgage loan, and it helps to assist you with cost associated with the purchase of a home. So, if you qualify for the program, you can receive up to 4% of the purchase price or the market value, which is or $6,000. So the cap on the program is $6,000, and you could use that money for down payment. You can use it for closing cost assistance, and that's repaid monthly. It's part of your note. They amortize it basically over the life of the loan and at a 0% interest rate. So the point of this is that there are so many programs that are available to you to assist you with money to help with down payment assistance programs, um, with your down payment and or your closing costs. I had a client the other day, and we were looking for a rental, and I was sharing with them, what you pay for a rental, you could really afford to purchase a property. And they were like, well, we don't have all of the money that we would need for closing costs or down payment assistance. And I'm like, there are still programs that are available that provide down payment and closing cost assistance. New Jersey FMA, that we talked about before, has programs. The banks have programs. Different cities and counties have programs. And I hope to bring you as much of those programs to this program as possible. But there is money out there available. So, what are the requirements for the Pennsylvania program? If you're purchasing a property in the state of Pennsylvania, the Keystone Advantage program, you have to have a minimum credit score of 660 to participate in that program. Um, Like I said before, that assistance can be used for the required down payment, or you can apply that $6,000 to your closing costs. So if 4% of the purchase price is under $6,000, you'll receive a little bit less money, but the maximum that you could receive is $6,000. Um, the minimum loan amount is $500, which is totally unheard of because most lenders will not do a loan for something under $50,000. So, um, as a borrower, you cannot have assets greater than $50,000, which means you can't have $50,000 sitting in the bank after you deduct your funds needed to close on the loan. So all of that cash or upfront money that you need has to be in your checkings account, your savings account. It can be in stocks, it can be in bonds, it can be in certificate of deposits or any other liquid asset that you can get. If you're using funds from your retirement account, like a 401k or an IRA or a pension, um, those funds will only be considered if they can be withdrawn without a penalty. Okay. Like if you get the penalty for the age requirement. And right now, they are suspending those penalties based on COVID. So you're actually in a pretty cool place in terms of that requirement. The program can't be combined with any other Pennsylvania finance program. So actually, there's one exception to that. It's the Access Modification Loan Program, but we're not going to talk about that program today. And they can be used with conventional loans, with FHA loans, VA loans. And so any FHA, VA, or RD loan, as long as it meets the underwriting requirements, you can apply this loan on top of um, the down payment requirements. So that's a little bit about the Keystone program. And so for those folks who are in Philadelphia, and you're saying, what about us? Or what if I want to purchase a property in Philadelphia? The taxes are a little bit less in Philadelphia than they are in New Jersey. So some people like to purchase on that side of the house. Or maybe you live in Philadelphia currently and you're wondering, what's available for us on this side. The other program that is available, I'm just reading my notes here. The other program that is available is the NeighborWorks program. And the NeighborWorks program is a little bit different in terms of the requirements. So basically, on that program, it is a forgivable loan. So as long as you stay in the property for I think it's 5 years. Yeah, it's 5 years, just like for New Jersey. If you stay in the property for 5 years as an owner occupant, then you can forgive that loan at 20% each year. So every year within those 5 years, 20% gets taken off based on the anniversary date of when you close on that property. So it's pretty cool. And if the house is no longer your principal residence, or if you sell that property, repay that property, refi that property, the balance of that loan is immediately due. So you really have to stay put for 5 years in the NeighborWorks program. And the goal of the program is they really want people to live in the properties, to be in the neighborhood, to be a benefit to the community, and to invest in home ownership. So these are not for flips. If you qualify for military benefit, they have a special program for you. So the repayment terms in Pennsylvania are a little bit different for military people who are participating in the neighborhood program. So are there any income restrictions for eligible borrowers? Well, the answer is yes. The income limits set for is based on each market. So depending on which neighborhood you live in will determine what the income limits are. So they calculate them based on the borrower's income, in connection with how many people live in that household. So if you have 5 people in the household, the income requirements would be different than someone who, say, has 3 people in the household or 8 people in the household, and that's including adults and children. So it's the household side plus the income of the people in the households. Um, if you are a military service member, if you're a veteran, if you are law enforcement, or you're pre K-12 grade teachers, paraprofessionals, firefighters, or emergency medical technicians, all of our essential people right now, you actually get a break. Your income limits can be higher under this program. So there's a special program for first responder, military, and teachers in the state of Philadelphia as well. So if you fall into any of those categories, you definitely want to check out the higher income restrictions. So what if you have people who are living in your property? Okay, he's not in yet. Okay. What if you have people who are living in the house with you? Can you include their income, or can you include them? They're in the household income calculation, even though they're not on the mortgage loan. The answer is no. No. So only the borrowers who are on the loan, who meet the income requirements, will be included. So that's really important to know about the neighbor lift program. So different from the Pennslvania finance from the Keystone program, Keystone Advantage program, with the neighborhood programs for your assets, they kind of do it a little bit differently. So they do not include your retirement account. So you can't use your 401k, your IRA, or your pension, unfortunately. You can't, no stocks, bonds, mutual fund, certificate of deposits, business checking or savings account. Yeah, so it's a little bit, you have to meet the out-of-pocket settlement requirements, which means you have to have some of the money or most of the money for your settlement costs under this particular program. And I would check in with the lender first about it so that you make sure you have enough of your own money to participate in the neighborhood program. You do have to participate in a homebuyer education program. So for the state of Pennsylvania, that is an 8-hour class, and that class teaches you about the home buying process. It has to be a HUD-approved counseling agency. I'll say that again. It has to be a HUD-approved counseling agency. And they've gone through extensive training. And so once you get your certificate from them, if you got your certificate from someone else that is not a HUD-approved counseling agency, it's not going to be able to count for you, and you'll have to do it over again. So we were talking about with the other program, if you could have like another property, right, and still be able to purchase. And the requirements are essentially the same for this program. You can currently own a home, but you have to be selling that home to move in the next home. So you don't necessarily have to be a first-time home buyer, which is a really cool thing. So let's say as long as your house is on the market and you close, you can't own any other additional properties either, or including investment properties with the neighborhood lift program. But you can, move up into a new property. So you don't have to be a first-time home buyer, which is pretty excellent. Another question that comes up is, are short sale properties eligible for the neighborhood lift program? And the answer is yes, 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 yes. Short sale properties are eligible for the program. So you have to have a purchase agreement for the short sale property. It has to be signed by both the buyer and the seller before you can apply for the funds. That's okay. After that agreement is ratified, you can use funds in connection with financing of a Wells Fargo short sale. But if Wells Fargo is not the new first mortgage lender on the short sale purchase, I can't speak this morning, another lender must originate the new first mortgage loan. But you can use it with a short sale property. So that actually is kind of cool because there are some loan programs that don't allow you to purchase short sale properties with down payment assistance funds. Let's see, what other question did I have? So what do the funds cover? You know, you can cover your closing cost assistance, you can cover your down payment assistance, and any of your out-of-pocket expenses as a borrower can be covered with these funds. So that's pretty cool. If you have another type, so let's say the out-of-pocket expenses for FHA are kind of different sometimes for other first mortgages, because with an FHA mortgage, under this program, the borrower has to have their own funds for the 3.5% down payment. That's just for the FHA product. But you should consult with your lender and they can clarify any other stipulations that they as the lender might have. And if you want to know if you qualify, you can definitely go to the website for NeighborWorks or for NJFMA. There are several other programs that are eligible, so you can layer the money, which is kind of cool. You can use this $6,000 plus money that you might get from, like I said, the state of Pennsylvania, any of the city programs. You can layer that money with this money. So put it all together and you are ready to knock out those closing costs, even seller assist. So it's pretty good. So once you get qualified for the program, you know, you basically have to fill out the application, work with your lender, and only certain lenders, like with all of the state programs, whether it's New Jersey or Pennsylvania, all of the lenders are vetted, right? So once they vet the lender, they put them on the list. You can go to the website and NeighborWorksWPA.org is one of the websites. There we are. Yay, there he is. I was just wrapping up about the NeighborWorks program where they could go to get the information on that. So I want to invite in Mr. Frank Evans, who is our guest for today. He's from U.S. Bank, and I've actually kind of done an overview of both the NeighborWorks and the Pennslvania Down Payment Assistance Program. But I really want you to say, a little bit about who you are. Tell us a little bit about the bank and some of the other programs that you offer. And also we'll talk about what's happening with COVID a little later.
All right. Well, thank you, Clara, for inviting me to your meeting today. Yes, my name is Frank Evans. I'm with U.S. Bank Home Mortgage. I'm not on the East Coast, but I do loans all over the country. I have been in the mortgage business for close to 20 years. I started out with World Savings, which was a savings and loan, and I started out in the adjustable rate mortgage side of the business, so that's all I knew. That's all I could sell was adjustable rate mortgages. And of course, after a period of time, we were purchased by Wachovia, and Wachovia was purchased by Wells Fargo. And then I moved over to U.S. Bank because U.S. Bank gave me the opportunity to provide a lot of programs, whether it's portfolio, adjustable, FHA, VA, Fannie Mae, Freddie Mac. And I just want to bring up, I know a lot of customers or buyers sometimes are apprehensive about an adjustable rate mortgage. But as you all know, in our industry, in the average of 5 to 7 years, somebody is purchasing or refinancing their property.
Mhm.
So if it's a cash flow situation where they like to have extra money and the people know that uh, they possibly will sell their property in 5 to 7 years, when the market starts to increase, you may want to look at adjustable rate products because right now it is at a, I guess, all time low, and so people are sticking with the fix, even though they're going to refinance in 2 years. Sometimes it doesn't make sense that way. But
Mhm.
Clara invited me on to talk about the Pennsylvania down payment assistance programs, and U.S. Bank is approved for two of them. There's one for Western Pennsylvania, and there's one for the whole state. So you have the Pennsylvania Housing Finance Agency Keystone Advantage program that provides up to 4% down payment assistance, which is $6,000 max. The minimum is $500, and it's a 10-year program though, so you're obligated for 10 years to stick with this program. Um, Not very difficult, but then there's the Western Allegheny uh, program, the Lift Assistance Program, that is for the western part of the state, and it gives up to $15,000 down payment assistance.
It's pretty good.
And that's a very good program as well. And I don't know how far your scope is, but there's also home buyer education program available so that you can get educated on these down payment assistance programs before you take them on. But I think they're very good. It doesn't matter, if your income, people should not be afraid to go with these down payment assistance programs because they're very good for everybody. Now,
Yeah.
there are income limitations,
Mhm.
and for the the first program, if it's a one person household, is $66,000 is the income limit.
That's
It
pretty
can,
cool. Yeah.
go ahead. What are you
No,
gonna
I
say?
said that's pretty good for one person.
Yes,
Mhm.
yeah. So I mean, so there's opportunity to really take advantage of it if you, like I said, OPM, other people's money, and
Yeah.
not your money. If you
Yeah.
can hold on to it. Yeah.
Yes. What's the credit score for the Pennsylvania Finance Housing, the Keystone? What's the credit?
660.
660 for that one,
Yeah.
and also for the NeighborWorks is 662, I think.
Yes, it is.
Mhm.
660.
Okay.
Yes.
Awesome. Awesome. Yeah. So before you jumped in, I was going through some of the guidelines for that program. Have you found that the time frame for closing these loans is, what has that been like?
Well, the time frame, of course, has been extended because of COVID-19.
Yeah.
There's a whole lot of financing going on right now as it relates to
Mhm.
purchasing and refinances. Then you have people who are sick who work in the industry, so sometimes the workload gets a little bit high for everybody. So there's a patience, but we do have specific timelines. We try to close these loans within 40 to 45 days.
Well, that's still not.
Normal,
Yeah.
yeah. Uh, and we want to do that because we know there's timelines as it relates to seller uh, wishes to get the loans closed so they can get out of the house and the new people can get in. And of course, realtors want to make their money. So, so that's the most important thing right there.
No, the most important thing is the client getting in the house, getting
Yeah.
that they want and love, and we're,
Yes.
we're there to service them. So, the sooner we can get that done for them, the sooner people can move on, especially in this environment, because I got a question the other day was like, what's the incentive of people to buy and sell in this market? Like, they were really surprised that so many people are still selling property and purchasing property in this market. Have you found that to be true as well in your market?
Yes, I have. Across the United States, you're
Yeah.
seeing a lot of virtual sales going on now
Yeah.
in the market. And, just like you have this broadcast today, everybody's doing Zoom now, or they're having some kind of web access where they're being able to sell property. So you may see a slight slowdown as it relates to properties being sold, but people are still buying.
Yeah.
People are still buying.
Yeah.
They want properties, and sellers want to get rid of the properties because they want to move on to something else. Yeah,
Yeah. Yeah. A
So it's a
lot of
time to be creative.
yes,
Yeah,
yes.
yeah,
And you're right. I'm seeing a lot more investor activity where people people out of state are purchasing,
yes,
here. They
yes,
purchased properties here, they flipped them, and now, the nice thing is they fixed them up quite nicely. And so they're reselling them to, the traditional or the retail buyer market. And then there are people, because of what's going on, they're upsizing. They're bringing
yes.
their family members into their, people are coming back together, where the parents are moving back in with the children to be closer together. Um, and so they need more space. So,
That
but
makes a lot of sense to do that. A lot of times when you have younger couples buying a property, sometimes they kind of overstep a little bit because when you buy a very large property, there's large expenses that come with it.
yeah,
Because sometimes you want to take baby steps and to get used to your new monthly payment, uh, the new expenses that go along with it. Then you can upsize. Uh,
yes,
but to
yeah,
upsize, bringing in family members, as far as parents are concerned, of course, there's resources to help you make
yeah,
those monthly payments.
yeah. It's a
Yeah,
win-win for everybody, which is a
yeah,
phenomenal thing. And you brought up something else that's really important for first-time homebuyers that they don't always consider is like, oh, I want this great big house. Well, you got to heat that house, and the higher the ceilings are, the more
yes,
the heating bill. you know,
yes,
the water bill is about the same, but heating, electric, gas, all of that goes up, and you have to build those expenses, on top of that payment, as
and
well.
I'm speaking from experience. So, by having a smaller home and then getting a bigger home, and then wow, looking at the energy bills just going skyrocketing, you're
Yes,
taking on much more expenses. Yes.
yes, yes. So, I met Frank through the National Association of Real Estate Brokers, and I just encourage at one of I think it was the Las Vegas conference, and
Yes.
and
Yes.
one of our midwinter conferences. And this organization, if you are a real estate professional, in real estate, lending, in title, home inspection, appraisal, any avenue, any lane in the real estate industry, I really encourage you to join the National Association of Real Estate Brokers. There are local chapters across the United States. It has extended my family and friends, and I just, there's a wealth of information and resource within the organization. And you hear me saying all the time, I met this person through the National Association of Real Estate Brokers because there are some, like Frank, there are some very knowledgeable people who are doing some wonderful things in the industry of real estate and can help you financially with moving forward in this industry and building wealth through real estate. So that's really important. Were there other things that US Bank offers that you wanted to talk about before we wrap up?
Well, as I started out early, very quickly, we go as low as 620 as it relates to a credit score for a customer
Okay.
for any loan program. When it comes to down payment assistance, of course, a little bit different because you have a second trustee behind that first trustee, and
Yeah.
they want to make sure that the individuals or couples are really in good financial position and have good
Mhm.
credit history. So 620, as low as we go. Of course, if you go 620, you're not getting the best
Interest rate.
interest rate. So, the higher the interest rate, um, uh, the lower the score. The
Yeah.
lower the interest rate, the higher the score. But
Yes.
we do, as I said, the FHA, Fannie Mae, Freddie Mac portfolio, and portfolio is good in certain instances, especially when you come to jumbo loans. We do jumbo loans, so we go up to $25 million, so that is or more, depending on the profile of that customer and the kind of income they have on a continuous basis. Um, and
And
I
you can do
go.
commercial and land too. That was the other thing we
Oh
were
yeah, so
talking
we
about.
do we do lot loans as well. We do
Not many
construction
people do lot
loans.
loans. Pay attention. Not many people do lot loans. So get
Oh,
Frank's information.
yes.
Yeah.
So yeah, we do lot loans, construction loans. We work well with builders. If you're working with a builder, we make sure that we get that application and loan process going for you to make sure that if there's monies that have to be doled out during the whole process, that we can do that. So we can get approval. We won't lock the loan until probably when you're 90 days close to closing and getting into the property.
Hmm.
So we take time with that. So we have a full suite of products. It's not something more than what somebody else can do. I know there are certain lenders right now that are not doing uh, the jumbo loans. Or they're not going above 80% loan to value. At this point, we're still going above 80% loan to value. You can do 5% down with Fannie Mae and Freddie Mac. Of course, you can do 3.5% down with FHA, 100% with VA. Um, with Fannie Mae, you can go up to 97% if you have a down payment assistance program behind the first. And the better thing about the Fannie Mae product is that once your property appreciates to 80% loan to value, then you can call the lending institution and say, can you remove my mortgage insurance? Because anytime you're above 80% loan to value, you must have mortgage insurance. With FHA, 95% of the time, your mortgage insurance is tied to that property until you refinance or sell that property. All right. So those are the options that are available to you. And anybody like to use me as a resource, it helps me keep my skills sharpened, even though I don't get the business. It just helped me build my cadre of associates around the United States. And originally, I'm from Cleveland, Ohio, so I'm familiar with that part of the country. I've lived in Englewood, New Jersey as well, so I'm familiar with the New Jersey, New York area. Um, and so I just had a chance to live all over the country, San Antonio, Vegas, Northern California, do the job transfers. So it's just a matter of being able to expand your horizon and offer um, options to customers all across the United States of America.
Indeed,
Yeah.
indeed. Well, I appreciate you coming on today, and I'm sorry for the mix up with the time. We were, trying to get you in, and I know you got a lot going on. Can you provide your contact information to our viewers?
Yes, just type it down here in the chat. Is that
Yeah, you can type it there and also say it. That would be great.
okay?
It's like U.S. Bank. Is it coming across the top? Let's see.
Yeah. If I put my cell number in, that's the best way to reach me because right now we're not working out of the office. We can't even go into the office.
Oh, wow. Yeah, that's most people. So
Yes.
we're definitely working from home for sure. So if you could just share verbally for the people who are listening now.
Oh, okay. Yes. Verbally, Frank Evans, U.S. Bank Home Mortgage. My cell number is 310-717-7866. My email address is frank.evans@usbank.com.
Awesome, awesome. And Frank's going to type that in the comments too for the people who are watching live, and for those of you who are watching on the replay, you will have his information. So I just want to thank you for coming today and for sharing the information. So our guests are really here as a resource to our viewers, and you can reach out to Frank and ask him any questions about the Pennsylvania um, programs, and also about jumbo loans, lot loans, commercial loans, if you're in that category as well. I just want to thank you. So, whether you're listening live or you're watching the replay, remember to like and share and subscribe to the channel. You can post any questions, or if you have thoughts for other topics that you would like us to bring to you, definitely put that in the comment section. So, if you want to reach out to our team here at Lyonsview Realty, the information is at the bottom. You can contact us at info@lyonsviewrealty.com, or call the 856-209-0905 number. So interested in a career in real estate, or you just need assistance with that next real estate transaction, we're really here for you to provide you with information, resources, and tips to help you improve your bottom line. So I hope you received something of value today. And I just want to send love and light to and prayers, out to anyone who has lost a loved one, or if you have someone who is in the hospital for whatever reason and you can't see them during this time. If you're experiencing the impact of physical distancing, and definitely to our essential workers, or those people who have to get up and go into a building, who are working to provide very needed services, for healthcare people, transportation, police, fire, protection, and especially our leadership. I just want to encourage everyone to take care of yourself, take care of your family, and to stay safe. So thank you, Frank, for coming.
Thank you, Clara.
Appreciate you.
Yeah.
For those who don't know, I'm Clara Lyons-DeVaughn, and Financial Fridays, we stream every Friday, 9:30 a.m. on Facebook and YouTube. So you can join us again next Friday at 9:30. And until then, keep living your best life. Thanks so much, Frank.
Thank you.
Bye-bye.